from 1st of October 2024, there's a big change which has happened in the industry. The change is earlier you pay a premium for 3 years and largely your surrender value used to be about 30 odd percent if you surrender the policy.
Correct.
Now, from the very first year, you can surrender the policy and the amount which you get back is much higher.
Wow, okay.
So this is extremely customer oriented move thanks to the IRD.
Folks, welcome to PaisaVaisa. I'm your host Anupam Gupta, and on today's episode, I'm thrilled to welcome for the very first time on our show Kotak Life Insurance, my guest, Manish Alagh, Head Tide Wealth Insurance Manager and Direct Marketing Channels at Kotak Life. Manish, welcome to PaisaVaisa. Thank you so much for doing this for our audience.
Thank you, Anupam. Thank you for having me here.
Great to have you here. What's been happening in the life insurance industry? As we were speaking before we started, I actually thought that this started more in the 90s, but it started in 2001. Correct. And here we are in 2025, almost 25 years are done. What are the recent, any interesting products that have come in from a consumer perspective?
Yes, in fact, to talk about interesting products, last year we launched two extremely innovative products which did not exist in the industry. In fact, I would say we were able to create two different categories of products altogether. Both these products has a bit of term in it. For example, one product, we call it Gen to Gen term product, which is nothing but wherein you buy a term insurance. In one policy, you can cover two generations.
Oh, okay.
So let's say a father buys a policy for himself, let's say at the age of 40, the policy continues on father's life till the age of 60. At the age of 60, the entire premium which is paid, the money is returned back to the father. And after that, either the son or the daughter is covered till their age of 60.
Okay, very interesting.
So in one policy, you cover two generations. So that is one interesting product which we could launch last year.
Yeah.
And second one is another new category which we could create was Tulip. Tulip is a combination of term plus unit link policy. So it is a policy wherein you can decide how much multiple of premium you need as a life insurance.
Okay.
So it can vary anywhere from 10 times into 100 times. So you can pay 1 lakh rupees premium and you can choose your cover from 10 lakhs to a crore.
Very interesting.
And plus balance amount, which is apart from mortality, gets invested into the fund choice that you make as a customer. It can be equity, it can be debt, it can be balance fund, it can be mid cap, it can be large cap, it can be any fund you choose.
Very interesting.
So these are the two innovative products which we could launch last year, and they're doing very well.
In general, how is the industry at an industry level doing? Scope for growth? We just, it's just 25 years since private life has come in. We were discussing about how the premium as a percentage of the GDP is just 3%.
Correct.
So there's enough, room for growth.
Yes, because the developed countries, most of our developed countries are in double digits. We as a country, where I would say in terms of penetration, we are still at a nascent stage. I mean, in fact, last year, the penetration dropped from 3% to about 2.75 to 8%.
Yeah.
So it actually dropped. So if you ask me, is there a natural pull? Yes, during COVID, there was a natural pull towards life insurance. But by and large, there is inertia before people buy this product. Everybody knows they need it, but there is inertia, which is why even today, it's one product which is always sold and never bought.
Even today?
Even today.
Very interesting. I would have thought that, maybe when you're getting your first job, that is maybe one event where you would want to consider. But folks, if you do not have life insurance, you should please consider that as a product for yourself. Manish, we're here with a very unique topic, okay? Life insurance for legacy. I feel that financial planning itself is a relatively new concept in India. We're still a very young population. Retirement and all that still seems very far away to a lot of us, although it is definitely more important. It should be taken more seriously than it is right now. What is legacy planning in that same vein?
See, if you look at financial planning holistically, it should serve largely three purposes.
Yep.
One, money if you live too long. which is for retirement. Money if you don't live too long. Money for emergencies and opportunities. So legacy revolves around all these three aspects. So when we say money, if you live, and interestingly, life insurance is the only financial product rather, which works in all these three situations. Any other financial product, it works either in 1 out of 3 or 2 out of 3 situations. Life insurance works in all the 3 situations. So let me explain one by one.
Yeah.
So when we say money if you live too long, which means the way dying too early is a problem, even living too long is a problem because you need money. So considering life expectancy in India, which will keep growing, let's say, for example, life expectancy in India increases to the age of, let's say, 85. By and large, people work till the age of 60. And one starts working at the age of 25, you work till 60. So you work for about 35 years, but you also have to provide for yourself and spouse for the next 25 years after you retire. So you need money if you live too long. So that is one part. Now, what happens if you don't live too long? You still have to leave legacy behind, right?
Okay.
Which is where in financial planning, life insurance plays an extremely important role in creating that legacy. We call it Viraasat. So Viraasat can be anything. It can be emotional, it can be cultural, you can even leave your value system as legacy. Legacy can be personal, when you leave behind the impact of work which you do, and then legacy is financial. Basically, it depends upon the kind of assets you create. So we spoke about money if you live too long, money if you don't live too long, and then money for emergencies and opportunities. So when you want to start anything new, or you want to venture out something, or some new investment, some new opportunities come your way, or some emergencies happen suddenly, it could be medical, it could be anything. You need to have money for that as well. Which is where Viraasat is become holistic. It's not only about financial, but if you plan for financial legacy, even other legacies can be taken care of.
Very interesting. So retirement as such is a goal that everybody is familiar with within financial planning, right? Because financial planning is goal based. Retirement is one goal. People understand that. So who is legacy planning for exactly?
I would say legacy planning is for everybody. I mean, there is nobody who can be untouched without legacy planning. I mean, all of us, we want to leave behind something. Whether person is, depending on which state of, doesn't matter which state of society you come from. You do plan a legacy. For example, if you're an actor, you have a legacy. If you're an artist, you have a legacy. If you do financial planning, you still have a legacy. So I would say it is for everybody.
Very interesting. So now this seems to be a topic within families. Like families need to discuss it internally. You spoke about this in your previous answer also. What are the emotional and financial aspects of building a family legacy? I mean, how is this conversation supposed to be had at home? Emotional aspect to thoda sa ho hi jata hai, becomes like that. But what would the financial discussion be like within a family for this?
See, now, whenever we talk of life insurance, especially to any of our customers or any of our clients, we ideally insist, our financial advisors, they insist that if possible, please have your family around when we have this discussion. Because when I'm planning for legacy, I don't plan only for myself. I want to leave behind certain assets which I take care of. So how does it work? Now, when we say, okay, how should one decide how much insurance is required? So there are three ways to look into it. We say, okay, thumb rule could be 10 times of your annual income.
Okay.
Is one way of looking at it. So if somebody is earning, let's say, 30 lakhs per annum, then it should have at least 3 crore of life insurance. That is one way of looking at it. Second way of looking at it is your assets minus liabilities. So whatever is the gap that can be the amount of insurance one should have. Third concept is a concept of human life value. We say, okay, today you're at the age of 40, your earning is, let's say, 50 lakhs per annum. You will work for another 20 years. So 50 lakhs into 20 years is 10 crores. So you should have at least 10 crore life insurance. Because if you were there for another 20 years, the minimum you would earn without any growth is this much amount.
Yeah.
So that's the
Correct.
legacy you should leave behind so that your family can take it forward.
Yeah.
So which is where explaining all these things, we have a process of need analysis when we do all this. Explaining all this thing in front of the family, though it's a very, very sensitive topic. But still, once you involve the family in this discussion, it's very important, because it's always about doing things when you're not there.
So I want to understand one thing. Where are things today? Like, you're someone who would be meeting with your advisors. You would be traveling a lot, meeting your advisors across India. What do your advisors tell you when you tell them that, this is a product, this is how you sell it, these are the features? They are the guys they are actually the feet on the street, people who talk to the families who are buying these products. What are they telling you nowadays when the advisors hear something like you just said? What are families talking within closed doors? Like, what do they want?
Thanks for asking me that question. In fact, last week we formed a product advisory council, wherein we involved our top advisors from the country, around 30 top advisors in the country. Because why we did this? Because they are the ones who are closest to the customers. So they gave us a lot of interesting feedback. And so before designing any product, we don't think what we can sell. We think what customers want. And things have really evolved, things have changed. And this time when last week, it's as recent as last week, as fresh as last week rather, they told us different customers have different needs. For example, there are customers who look for immediate income option. For example, if I invest today, I want income from next month. So would you believe we also have products wherein we give income from next month?
Yeah, I mean, that thinking has always been... People have certain views on that, but that's a different topic altogether, which is fine.
Different people have different views. So we listen to the customers. We conduct surveys, customer surveys at our level. Plus, we also listen to our advisors, our distributors. What are they telling us? And depending on demographics, depending on different age groups, and nowadays, if you look at it, zillennials,
okay.
right?
Yeah.
Basically,
Gen Zs or whatever.
Gen Z and millennial, combination of Gen Z and millennial. So the way they buy, the way they interact with us is very, very different.
Okay.
They are more digital. They are more tech oriented. So their expectation from us is changing now.
Okay.
So which is where our interactions are changing. The expectations are different. Nowadays, there's also a gig economy is emerging. So there are people who are gig workers nowadays. So their expectations are different. So there are people who really think long term, but there are people who don't think long term. So you cannot have, one size shirt for all. It is different for different people. So some need immediate income, some don't. Some need long-term planning, some don't. And then again, depending on your overall family setup, nowadays it's most families are nuclear families. So the way one thinks is also changed. The earlier social security of joint family is kind of going away. So people plan differently.
So I want to ask one thing, because this has always been, from the customer's point of view, always been a bit of criticism, so to say, of the life. I'm talking at an industry level now, mis-selling.
Right.
Where I think where we are now today in 2024, I think the regulator themselves have done a very good job of cleaning up certain practices which belong to a certain era. Thankfully, they are not there. But at an industry level, where do you think we are? You think that things are improving? Customers, and your advisors would probably be giving you the same feedback, are having more confidence in the product that they purchase from you versus what would be pushed, that imagery that you have of someone stepping into a bank branch and constantly being sold some insurance product or the other. Where are things on that front?
No, things have significantly improved, I must say. For example, I'll give you 2 examples. Earlier, if customer purchases a policy, customer had an option of cancelling the policy during a free look period.
Yeah.
So earlier free look period used to be 15 days. Now it has been extended to 30 days, about a month.
Wow, okay.
So after customer receives the policy, customer has 1 month to decide whether I need this policy or not. This one. Number 2, recently, from 1st of October 2024,
Yeah.
there's a big change which has happened in the industry. The change is, earlier you pay a premium for 3 years and largely your surrender value used to be about 30% if you surrender the policy.
Correct.
Now, from the very first year, you can surrender the policy and the amount which you get back is much higher.
Wow, okay.
So this is extremely customer-oriented move, thanks to the IRDA. And every decision, every change with the regulatory body brings about, it's keeping customer in mind.
Yes.
And our complaints ratio, it's minuscule. I mean, it's hard, not even 1% at this point of time.
Okay.
So that's really reducing. And one more measure of success which you can apply to actually see what's the customer satisfaction is the renewal collection. And we call it persistency.
Persistency.
The persistency percentage of the entire industry, of all the top companies, is increasing year after year.
Which is a good sign.
Which
Which shows that people are renewing the policies, paying
Correct.
the premiums and continuing it.
Correct.
If I've understood persistency correctly.
Absolutely.
Nice.
So you pay the first year premium, then you again pay the second year premium, which means you want to continue with the policy.
Yeah. And if you want to, then at least awareness to hai aapko. Yani
Awareness hai.
Yeah.
Awareness hai.
Yeah.
So all those
They're positive. Yeah. And I think these should improve going forward.
Correct. So free look period,
Surrender value.
early surrender value,
Yeah.
increasing persistency.
Okay. Coming back to inheritance and legacy planning, Manish, most people look at term insurance as a protection product, right? Because I'm protecting my family. How does term insurance now, the same product, serve as a tool for protecting family inheritance? Okay, I think they mean the same thing, but maybe looking at it in a different way, or, what do you think?
Correct. Let's say a customer buys a house. In a city like Mumbai, the average, since we are in Bandra is more expensive, but on an average, in Mumbai, the average cost is anywhere between, let's say, 3 to 4 crores.
Yeah.
Right? So let's say a customer buys a house worth 4 crores. Now invested that money into 4 crores, which is a huge sum. People's, it's a life, at times it's like income of a lifetime.
Yes.
Now, how do you protect that 4 crores, right? So if I buy insurance worth 4 crores and God forbid something happens to me, in the next couple of years, my family will still receive 4 crores from the life insurance company. My beneficiary will receive.
Yeah.
So in a way, I am protecting my legacy.
Okay.
Because house is legacy which passes from one generation to another. How do you protect that legacy? You have to cover that legacy with the help of life insurance. Life insurance when you say financial protection, it means nothing but protecting your income.
Right.
Future income.
Yeah.
So as I mentioned earlier, human life value when we talk of. If somebody is earning, let's say, 30 lakh rupees per annum and the person is going to earn for next 20 years. So 30 lakhs into 20 years is about 6 crore. So if you buy life insurance worth 6 crores, so actually protecting your legacy or income that you're going to create for the next 20 years.
20 years, yeah.
So we call it a salary income protection plan.
Yeah.
So that's how you can protect what you create.
Okay. Folks, we're going to take a small break out here. When we come back on the other side, we're going to get more specific into how you purchase life insurance covers, what's the right amount, and much more. Don't go anywhere. We will be right back.
Hey, it's been another great week on the IVM Podcast Network. From Amazon Music presents India Pod Day 2025. In association with IVM Podcast, we bring you a special episode of Cyrus Says with Cyrus Brocha, who is joined by the Internet Said So gang. Also, Puneet Pania and a surprise guest for a laughter-packed ride. From bizarre internet facts to comedy and food, it has it all. On A Century of Stories India, Kunal unveils how Leo Tolstoy's letters shaped Gandhi's philosophy of non-violence. On Get Real About Wealth, Sonia chats with Tahir Badshah, CIO of Invesco Mutual Fund, about personal wealth, investing and balancing finance with mental health. Folks, if you like our show, spread the word. Tell your friends and don't forget to rate and review them wherever you're listening to them. Follow us on our social media. We are at IVM Podcast on Twitter, Facebook, Instagram and LinkedIn. You'll also find all our shows on YouTube channel by their show name, so do look out for them and have fun watching. And finally, we would like to thank our sponsors this week: IDFC First Bank, Axis Mutual Fund, SBI Mutual Fund, ICICI Prudential Mutual Fund, IndusInd Bank, HDFC Bank.
And welcome back. Manish, I believe that the umbrella term you've got for the product is Viraasat, right?
Correct.
Can we just talk about that for a while now? Because in the first half, we spoke about legacy planning, emotional aspects, financial aspects, term insurance, but Viraasat, I mean, it's a word in Hindi. Most of our audience is aware of that. It's not something that you associate normally with life insurance. So help us out there.
See, you're absolutely correct. So whenever somebody says Viraasat, what comes to your mind? What comes to your mind is assets, property.
Yeah.
I bought a land, I bought a house,
Cars maybe or whatever.
I bought a car,
Yeah.
I invested in
Zameen Zaidad jo hota hai.
Zameen, Jaidad, Virasat.
yeah.
Okay, that's what comes to your mind.
Yeah.
कि ये मेरे father छोड़ के गए थे, ये मेरे grandfather छोड़ के गए थे. That's what is Virasat.
Indeed.
People associate Virasat with that term.
Yeah.
But here, we are thinking a little differently. We are saying, we are here to help you protect your Virasat.
Okay.
So you created Zameen Jaidad, okay, and you want it to continue from one generation to another, ek peedi dar peedi, okay. We will help you to protect that Virasat with the help of life insurance. For example, like I mentioned earlier, we have a product which we call it gen to gen term, wherein in one policy we cover two generations. So you buy one policy and we cover two lives, which is two generations. It can be father-son, father-daughter, mother-son, mother-daughter. We cover two generations in one policy. So overall, so again, coming back to house. So if you have a house worth 10 crore, you buy life insurance worth 10 crore. You're protecting that 10 crore Virasat. And then you want to protect your income as a Virasat. So whatever income one is going to generate for the next 20, 30 years, you protect that with the help of Virasat protection plan, I would say.
Okay. So building on to that, like if there's someone who's hearing this for the very first time and wants to understand what is the amount of cover. Now you mentioned about a 10 crore property.
Right.
Buying a 10 crore life insurance is a little bit out of reach for a lot of people, as I'm sure a 10 crore property also would be. But in your view, and you mentioned this also about some 30 times or something, what's the right amount of term insurance at every stage of life? Like if there's someone who's a 25-year-old, Virasat might not connect to him at that age. But in general, how should one look at the absolute amount of life cover at every stage of life? Say 25, 45, and by the time of retirement, I don't know if anybody does life insurance at that time, but if you could just cover this question about life stages and amount of life cover.
Okay. So by and large, most of our customers are in the average age of our customers is around 30, between 30 to 35.
Okay.
At that age, normally the thumb rule says whatever is your annual income, at that point of time, you should be covered at least 10 times of that.
Okay, sure. 10 times income.
10 times of annual income should be your cover at that age. When you're nearing retirement, let's say you're around 55 or so, even that point of time, your coverage should at least be about 5 times.
5 times,
It should be at least 5 times. Because in the next 5, for example, income is 50 lakhs. In the next 5 years, you will earn 2.5 crores. And if your income, if you multiply 50 by 5, it's 2.5 crores.
Sure.
So whatever you're going to generate, income generation for the next 5 years, you are protecting. So first you have to think of protecting that. So it can be 10 times when you're starting, when the average age is 30. It can be 5 times when you're nearing retirement. Let's say you're between 55 to 60, and it can be anything in between that when you're between 35 to 50 or so.
Yeah. Is this awareness there today?
No, not really.
Yeah, that's what I thought. Yeah.
Yeah, most people become aware after they speak to a life insurance advisor. Till that time, because insurance is not a topic of social conversation.
Yeah, always. Yeah.
Nobody goes to a party and says, okay, I bought a life insurance today. You might say, I bought a house today.
Or a mutual fund or something.
Mutual fund today.
Yeah.
I bought this stock today. I got invested in this IPO today.
Yeah.
You never say, I invested in life insurance today.
Yeah. So, and this other thing now, is one policy enough? Or should I keep adding more policies? Like, I have one policy, a 20-25 year policy cover of, I don't know, maybe 1 crore. I need more. So, I know that I can't add on to that policy because policies don't work that way. You can't add on, like you do a top up or something. So, how does one approach that? You buy new because for that, then I have to again, as I grow older, medical checkup, etc., etc. How does that work?
See, to answer to your question, is one policy enough? The answer is no, because let's say you buy one policy at the age of 30, you bought that policy at that age, keeping that current situation at the age of 30 in mind. And you'll be happy to know, yes, there are policies wherein in the same policy you can keep increasing your cover.
Oh, okay.
Nowadays, there are such policies.
Sure.
Even in term insurance, you can. There are step-up options wherein you can keep increasing your cover every few years by 10% or so, depending on income. And why one policy may not be enough? Because when your income increases, you create more assets, plus you also create more liabilities. So you have to protect the gap between the assets and liabilities.
Yeah.
So depending on your need, you have to keep enhancing your cover, or you have to. And once you reach 60, and you have very well planned, your asset allocation is great.
Yeah.
Then maybe you don't need life insurance.
You don't need life insurance. Your corpus is enough to sustain you.
Then you need retirement, annuity.
Yeah.
So annuity is the reverse of life insurance.
Yeah.
So maybe till the time you're working, till 60, 65, you need life insurance. After that, you need annuity.
Regular income.
Yeah. Because life insurance, nothing was protecting your income.
Yeah.
You have to protect it till the time you have income.
Yeah.
When you don't have income, you don't need to protect.
Yeah. Annuities are still not, I don't think they're really well understood in India, but hopefully they will be. So along with the question of more than one policies comes the tenure.
Right.
Because I think I bought mine quite some time ago, and that time 25 years was it. That's it. So at the age of 40, I know that at 65 I will need it, so I buy 25 years cover. Now I believe that you've got like something that can take you all the way to 100 and 85 and 95. But
yes.
How practical are they, and what's your advice here?
See, again, everything is situational. Okay? It means different things to different people.
Yeah.
For example, now most term insurance policies, they're available till the age of 85, and some even go up to the age of 100. There are, in fact, unit-linked policies or even traditional policies which go up to the age of 100.
Okay.
So how it works is, till the time one is alive, you convert that into an income plan, wherein every month or every year you receive income till the time you're alive. And God forbid something happens, in that situation, the life insurance, the death benefit goes to the family. You leave that as a legacy behind.
Okay.
So it can be both. Now, how much should one have? It depends. Now, for example, and there's my personal take, depends upon your personal situation as well. For example, if there are parents with a special child, okay, and what does such people think all the time? They think, okay, after me, what next? Will my child be able to take care of himself or herself financially?
Yeah.
In that situation, you would also plan for legacy, that, okay, I invest today and income is received by my child, and at any age, God forbid anything happens to me, even that maturity amount or that death benefit amount should goes to my child.
Sure.
So, which is where life insurance advisors or financial planners, they play an extremely important role.
Yeah.
What is good enough for me may not be good enough for you.
Sure.
So, if you know, okay, I've saved enough, maybe till the age of 60 cover is good enough.
Yeah.
But if your situation is different, depending on your children, your family, who have to take, how number of dependents, your age, you can go up to 85.
Situation to situation. Speak to your advisor, folks.
Right.
Last two questions now. Manish, how to choose a term insurance policy that is appropriate for Viraasat or for legacy planning? How does one actually sit down? What are the questions I should be asking my advisor? How should I approach this?
Again, what's my income today? Thumb rule says my income into 10. Income into 10. Then I also need to look at my premium paying capacity and what should be the tenure.
Okay.
If age is 35, let's say my income is 30 lakhs, so 30 into 10 is 3 crores. Now, premium for 3 crores could be 50 to 60,000. If income is 30 lakhs, you may or may not want to pay 60,000. So you might say, no, I want to pay only 10% of my income as insurance premium.
Yeah.
So then you can pay accordingly. So income, multiple of my income, then how much premium, my premium paying capacity, and for how many years I need.
ठीक है. Last question. How does the family ensure claims are passed? Life insurance is something where claims, I think we're in the 99% plus place, or is it?
99% plus.
Yeah. So what about those 1% that don't get passed? I mean, what are the reasons? We've discussed that question on our show with a lot of guests across the life insurance spectrum. But, God forbid, when that happens, the family is not in a good state of mind. And the last thing you want to hear is for the life insurance company to reject your claim. So what does one have to do to allow this to pass as smoothly as possible? Should be okay, na? I mean, 99% of all claims get passed, but still.
Actually, 99.5% gets passed. So it's less than 1%.
Yeah.
So again, it can be split into two parts. First part is at the time of buying, declare whatever you know. Honestly, whatever you know, declare honestly. All the declarations represent all the facts as they are regarding health. Of course, whatever you know about, right? And then, of course, most policies, large sum insured policies, person has to attend medical. So a lot of things are taken care of
at the time of purchasing.
At the time. So that is first part.
Yeah.
Now, second part. God forbid something happens, and that's that time when family really, really needs claim.
Yeah.
One should be aware about the policy document. Nowadays, policy documents are in digital form as well as physical form, so it should not be very difficult to access. You can even have it in your DigiLocker. So all the documents should be available. Documents needed are not much, actually, just 3 to 4 documents.
Yeah.
And the way we process claims nowadays is completely digital. Completely digital. It's seamless. One can upload all the documents digitally, and the claims get passed within a few days. So awareness about what documents are needed, and just contacting a customer. In fact, we also have a customer service through WhatsApp, which is 24/7.
Right.
So, and nowadays it's become pretty easy.
And hopefully the advisor should also be able to help you at that point of time. Yeah, of course. And it's always important for your family, for you to tell your family.
Right.
That discussion is important, right?
That discussion is important, which is where we insist at the time of selling, we involve the families as well, wherever possible.
Most important, folks, please keep track of that, because after all, who do we take insurance for? It is for your loved ones and the people that we leave behind. The Viraasat that's left behind, as Manish likes to say. Manish, we are done with the show. Our final standard question, any book recommendations for our audience?
See, I normally read a lot of management books, but one book which really caught my attention recently was Atomic Habits.
Atomic Habits, yeah.
And it's very, very popular. And it talks about very day-to-day simple things, that how small habits go a long way in building a happy and healthy life.
Wonderful. Happy and healthy life. Folks, on that note of positivity, that is a wrap on this episode of PaisaVaisa. My guest, Manish Alagh, Head, Tide Wealth, Insurance Manager, Direct Marketing Channels at Kotak Life. Manish, thank you so much for doing this for our audience.
Thank you, Anupam. Thank you so much for having me here once again.
Great,
it was great to be a part of this.
Thank you.